Today's session of Visual JForex, we are going to look into the double exponential moving average DEMA. This is the first session of the MA series in which we will be going through various moving average indicators. And till yesterday we finished off the Bell-Williams indicators, and now we are getting started with the MA series. So here this was the first part of this indicator series, and then now comes the turns of moving averages. Then we will consider the mathematical indicators and eventually momentum, oscillator, others, patterns, trends, and volume indicators. Let's get started with the MA. Here we will be going as per the listing. So first we will consider the DEMA, double exponential moving average. We will try to see how it is calculated and what are its function, how it can be used to help us guide in our trading decisions. Basically, it is a smoother exponential moving average, as here we have to take into account the exponential moving average and do calculations on that. So you can say this indicator is basically a derivative of the much used EMA, and here it is used for the smoothing price series and is applied directly on the price chart of any underlying security. So first let us consider the description. The description, as you can see, lists out its function. This is a fast acting moving average and it is more responsive to the price action, and it will not have the lag which is there in a traditional moving average. If you want to calculate it, all you have to do is use this formula 2 into exponential moving average, and then you have to subtract the EMA of the EMA. So you have to take the EMA of the EMA, and that will be smoother compared to the only single EMA, and that's why it is considered as a smoother version of the normal moving average. And this calculation you have to carry out while coming at the value of the DEMA, double exponential moving average. Now let us shift to the Visual JForex platform, how you can use this for building a profitable algorithm. So this is the Visual JForex platform developed by the Dukascopy Bank SA, and here is our block which needs to be connected, and this is the board, and you have to connect it any starting point. It can be from on candle, on tick, or on event. So all these start points are available to the developers who want to use this platform, and here you will have the brief description as well, and all these parameters, the brief description as well as the input parameters and output parameters are listed here. And whenever you feel you need further clarification, you can refer to this brief information out there. Now we have to use this indicator after determining, after you can say defining these input parameters. First we have to choose which instrument we want to use as a default instrument, and it can be any instrument which are listed, which are supported on this platform. Then comes the decision of the time period of the candle, and it can be anything from 10 seconds to 10 minutes. So let us go on chart at this point in time to consider the chart. So here I have plotted the DEMA. This is the double exponential moving average, and as you can see, it is lot smoother than what you will see the traditional EMA or the SMA. So here we have this DEMA plotted on the chart, and it is defined on hourly, and time period is of 30, so you can make changes to it. You can define these on 10 minutes. So as it is taking the time period as from the chart, and it is same as the chart time period. So here this is being calculated now on 10 minutes candle data, and here we have these formation in place where you can see that it is trying to follow the price action to the extent possible. So as soon as the price action drifts upward, we get this sharp turn, sharp curve on the upside, and whenever the price action dips below the this DEMA series, we see that eventually, now with not much time lag, the DEMA also curves on the downside. So that's why it is considered with not much time lag, and a lot smoother as well. So we have to see these functional details, and then on whichever time frame we want to use, we can use this. So on 15 minutes, it will the same chart, depending on the time frame, depending on the candles time period, it will be presented, it will be calculated differently. So here this is 30 minutes, and here we have this difference here. Now if we change it to 1 hour, again there is not much move on the lower side, and as the price momentum picks up again, this DEMA starts to climb higher, and if we choose 4 hour, then we have the DEMA still climbing pretty sharply. So depending on the time frame, depending on the time period you are working with, you will have the different setup, you will have the different values of the DEMA, and you have to see which formation is going to best serve your purpose, and then you have to act accordingly. So here you can see that we had this DEMA following this consolidation phase, and then eventually it accelerated on the higher side. Here also we had this brief move on the higher side, but then again the price action dipped, and we saw this DEMA following suit, and then it picked up, and now it has been in the upside momentum for almost more than 2 months now. So here this is the sample of the charting you can do with this indicator while putting it to use on the algorithm, the automated trading platform. So that's how you have to decide which time period is going to serve your purpose best. Then let us now make the change to hourly. So here now comes the question of shift. Shift is the look back period. Suppose if you are using 0, then the current value will be taken into account. Now if we see the current value of the DEMA of 30 time period on the hourly time frame is 1.15926. So this is the value which will be taken into the calculation, which will be taken into the algorithmic setup if we use the shift as 0, and if we use the shift 1, then the last hour's closing value will be taken, last hour's DEMA value 1.1591, and if the shift is 2, then this value will be taken into consideration. So depending on the shift parameter, to what extent you want to go back in time, and suppose if you want to use shift 10, then 10 hours back we will have to go. So that's how this parameter is going to be calculated, and it makes a lot of difference as your value will be different. So whenever you want to do the comparison, you can choose two DEMA blocks of different shift values, different look back rates, and then you can do the comparison to see if the DEMA is on the rise or is falling or is almost like in the sideways pattern. So depending on the shift value, you can do that. Then comes the time period here it is of 14, and on the chart we are seeing the time period of 30. Suppose if we make the change to 14, then it will be a lot closer to the price action. So here let us try to shift it closer to the price action. Okay, so here this is hourly on the time period of 14 candles, and these are hourly candles. So here we have these kind of sticky DEMA, as it is trying to follow the price action pretty closely, and it is succeeding to some extent, as you can see from the swift move it is making on the either side whenever the price action is taking sharp turn towards the either side. So here we are having this DMA on the 14 hours time frame. Now again if we change this to say 50, then again we will have different kind of formation, and here now this DMA is of 50, and as you can see we have this DMA plotted differently than what we were seeing when it was plotted on the 14 hours. So you can choose the time period of your preference. If you want to use 50, then you can use 50, but you have to see what is the setup which is likely to be profitable as per your view, and then you can do the necessary changes. You can do this customization of the algorithm, and you will get this output value. As here you can see it is being uh, named as DMA 10. So for each block you use for DMA, you will get different output values, and then you have to get these output values, and it will be a variable, and you can use these output value in any of your setup. You can do the comparison, and that will help you determine when to make entry and when to make exit in any trading. Now this comes to the last part, the settings. As I have already said while explaining the other indicators as well, it makes a difference where how you are calculating these DMA, and if it is on the bid side the price will be little different, the output will be little different, and if it is on the ask side, because of the spread the output will be different, and so is the case with the applied price. Depending on the applied price you will have the output value again different. So here I will explain to you on the chart as well. Let us for example make changes. Let us edit this indicator, and let us make changes to how we are calculating this, and now it is being calculated on closing price. Suppose we use low price, then we get a different formation here, and as you can see we had this DMA plotted uh, somewhat differently than how it was plotted in case of closing price level. Again let us change this to the high price, and again you will see that there will be a lot of difference between how it is going to be plotted. So here earlier when the low price it was plotted, it was crossing somewhere here, and now it has shifted to the high side as we are taking into account the high price for the DMA. So which way you choose to calculate, on which price you choose to calculate, makes a difference, and that will be reflected in your output values. So choose accordingly, and I think you will be able to make the distinction, make the difference, and come to your conclusion after taking into account various consideration and various formations which can help you guide in your trading endeavor. So that's it for DMA, and as we are now coming to close, I hope you have been able to understand its functionality, and you will be able to use this in charting as well as in automated trading setup. And of course, I will be eager to get the feedback how you are able to use this and develop your own profitable algorithms in coming days and months. So now I am signing off. We will be back tomorrow with a fresh setup with a new trading indicator, which will be, of course, one of the moving average only, as we are doing moving average series. Thank you all for joining in. Have a fabulous day. Goodbye.